Hey there everyone, FX Major here. Okay guys, on this video I'll be showing you the strategies which I personally use whenever I trade on a mobile cell phone. As I've said to you guys that I'll be making a video to actually help you and show you how you can simply analyze using your smartphone, whether Android, iOS or anything. Well, this video is only for a cell phone, right? The coming video will be for a laptop. I'll be showing you how to enter proper trades using your laptop, your PC, your tablet and all those things. I'll be showing you how to properly enter good trades and have sniper entries. Sniper entries actually mean that your trade won't be that much affected by anything, and that each time you enter your trade with an assurity that your trade is 90% accurate. The 10% is when the market might reverse, but the 90% is when your trading strategy or your trading positions will go into profits. Again guys, this is a YouTube video for only a mobile cell phone, using your mobile cell phone to spot good entries and to properly enter those trades and sniper all those trades. Again guys, this is FX Major, your mentor, the only doctor that focuses on changing people's lives and the only trader that pierces through the market. So again guys, if you are new to our YouTube channel, be sure to hit that subscribe button, like this video, and also share this video to other people so they can also be informed and educated on how they can start being profitable using our strategy. Again guys, we are also on social media platforms. If you are not on you are not following us on TikTok, be sure to follow us on TikTok, Facebook, Instagram, and also we do copy trading, offer copy trading master classes and all those things. So everything is updated on our TikTok account and also on our Telegram channel. The Telegram channel link is just in the description of this video, and obviously we're using the best broker, which is XM Global. Sign up using the link in our bio, or rather in the description of this video, to get your 100% deposit bonus and a $250 cash back for each time you trade. This is FX Measurement. So let's start with the video without wasting any further time. Okay guys, resuming with the video, or rather proceeding with the video, we all have to start from a daily time frame, right? So we can spot our sniper entry trades and to have confidence and confirmations that each time we take our trades are mostly accurate. So that's why we have to start from a daily time frame. Well, for people who are still new in forex and who are still looking forward in knowing more about forex, well, I'd suggest you watch this video until the end, as I will help you by showing you each and every step of the way on how to spot those levels which will be of high confirmation to you, and those trades which will be of high probability to you, or rather to your account. Okay, so let me just delete what we have currently. Let me delete all the objects, right? Okay, so as you know that we always have to start from a daily time frame. Well, not always, but we have to start from a daily time frame so we can see the exact market trend and how the market is moving and how the market is actually going about. Because let's say, for example, we are thinking of scalping, we have to know which direction the market will go so that we can properly enter those scalp entries or scalp trades, because we have to know the direction of the market in order for us to have profitable trades, to have profitable trades, right? Okay, so seeing this, or rather looking at a higher time frame, we can actually start by spotting our major key zones, which our first major zone which we have here is this zone here. Let me do this so you guys can properly see the numbers. Okay, the price. Okay, so we have a highest zone at 2789.90, right? And our lowest zone is here at 2286, which is this currently, right? So we are looking at the current market price, not the previous market price, but the current market price, whereby the market created a form of rejection at this point here, right? Let me highlight it for you. Let me highlight this area. whereby the market created a form of rejection or a reversal at this point here. Okay, so this is our major zone. Let me just do it like this, highlight it like this, so we can fully know and clearly know that this zone is our major key zone. And then we have this zone here. Let me just do like this. Let me check if it's the same size. Okay, we have this zone here, which is also our major key zone, whereby we can see that the market is reversing from that zone, right? We can see that the market is reversing from that zone. Okay, to actually, for us to actually know which proper entries to enter or which trading setup to use, we have to know that we have to use the FX major strategy. Well, with the FX major strategy, the FX major strategy actually focuses more on sniper entries and high probable entry points and positions or other trades. So the FX major strategy, which you guys, I know you guys have been actually asking me, Major, can you please share your strategy on how you enter your trades and how you see those beautiful trades, beautiful entry points, and beautiful profits? Well, I'll show you right now. But firstly, we have to use a strategy which I call the FX major high and low strategy, right? The FX major high and low strategy, which we have just had here, which is our lowest low and our high here. So guys, if you are not taking notes on this video, then why are you watching this video? This video is mainly for people who are willing to change their trading journey or other trading strategies and start being profitable with us. So be sure that you are taking notes, or if you are not taking notes, be sure to download this video so you can backtest this strategy and watch this video so you can get full knowledge and full understanding on how to trade using a smartphone or a PC, because this strategy can also be applied on a laptop or PC, if that's how you call it. This strategy can also be used there. So guys, be sure that you are taking notes and you are making sure that you will be back testing this strategy you yourself, because if you are not back testing the strategy, or if you won't be back testing the strategy, then it won't be working for you. You will just be using a different strategy instead of our winning strategy. Make sure that you are taking notes or downloading this video so you can watch it until you get full understanding and full video view or strategy view on how we actually enter our trades and be this profitable. And this strategy is actually not that hard. I've made it that a lot simple for people so that they can make money, because as you know, I'm FX major, the only doctor that focuses on changing people's lives and the only trader that pierces through the market. So this strategy is mainly to help you guys start being profitable and start making money. Okay, so the first key point, or rather the first key concept which we have is the high and low, which we have here, right? We have highlighted here, right? Okay, so after we have highlighted our high and low, we now enter, or rather put, our horizontal levels where we see that there are key major, not that major, but major, minor, semi major key levels, right? Key points, which is the first one is here, second one is here, here, I'll explain to you guys just now. Let me firstly put all these zones here. And then I'll explain to you how I managed to put these zones and why I am putting these zones here. I decided to make this video using gold because gold is much more of a respective commodity, whereby it respects most analysis, most setups, and most predictions, right? As you can see, I'm just making an example. As you can see here, we can see that we had head and shoulder, and then a push to the downside. That shows us that gold actually respects a lot of setups, a lot of patterns, a lot of chart patterns, and all those things, setups and all those things. Okay, so the reason, let me zoom it in so I can show you. Okay, so this, with this horizontal lines which we have added, are our key points of entries, or rather sniper entries, or proper entries, right? However, we will go to a 4-hour time frame and a 1-hour time frame as a drop down analysis from a daily to a smaller time frame for proper entries. Okay, so our horizontal lines actually represents to us where the market rejected and reversed, right? Or rather, where the market closed and opened the candlestick. Okay, so we can see previously that we had a closing here and an opening at this point here of this bullish candlestick, and then we had another bearish candlestick at this point here, which started from this point here and went to the upside there. You see, so these candlesticks actually represents to us that that's how the market will be moving. Either will be moving bearish or bullish. They are a representation of how the market will be moving, either bearish or bullish. Remember, guys, that the daily candlestick represents probably 70 candlesticks in 5 minutes, and probably 40 candlesticks in 15 minutes, and then 20 candlesticks in 1 hour or 30 minutes. That's a single candlestick of a daily time frame candlestick. Okay, so we can see here that we placed our horizontal lines at our wicks, right? We have wicks here, we have wicks, we have wicks, we have wicks. Let me also add this here. We have wicks here. We also have a wick here. This is not confusing. Just watch the video until the end, because I'll be removing most of these horizontal lines to show you how to spot the proper entry points. These weeks are just these horizontal lines are just there to show us how the market is actually moving, where the market will reverse or reject, and where the market might possibly reach, right? But however, we do know the overall move of the market, right? The overall trending direction of the market, that it has to move until this point here, right? It has to move until this point here, because that's the 90% rule of the market, whereby the market has to reach this zone here, this level here. Let me just add this zone here, this zone here. The market has, let me just fill it in. Let me use a brighter color so it can be visible. Yes, the market has to reach this zone here, right? It has to reach this zone here, as that zone is our 90% rule, because we can see that there was a lot of rejection at this level, right? Whereby this level is our support, and the market has to touch there. Remember that whatever goes up has to come down. Same applies to the market. Okay, so let's go back to what we were actually looking at. We were actually looking at the wicks, right? Where the market was mainly touching the wicks, and we can see and know that each time the market touches a wick, the market will reverse to that level and continue to its direction, knowing which direction it will take. For example, let's say, for example, we were supposed to take our trades at this. Let me edit this a bit. We were supposed to enter our trades at this point here, at this point here. Remember, guys, that I'm using a cell phone to make it convenient and simple for you to analyze, right? Let's say the market, we were anticipating to take a trade there, right? We would know that if for example, we are taking a trade there, possibly for a sell position, we would know that our stop loss, let me just remove this. we would know that our stop loss level will be just above our horizontal line, because our horizontal line represents to us as our entry point, and above it, that's when we know that the market is going for buys. If the market passes above our our zone, the market will go for buys. But if the market is still playing below this zone, that's when we would say that the market is going for sales, right? So we can see here that the market was in this trend here. Let me zoom it in. All right, we can see that at this zone here, the market was still inside it, right? It was inside it. So for scalpers would have made quite good amounts of money here, because this one move here is a lot of moves for scalps. Okay, so we can see that the market was inside this, right? And it failed to break above, therefore creating a wick at this point here. Also at this candlestick, bearish candlestick, which you have here, it created a wick, therefore going to the downside. Okay, so let me jump into a 4-hour time frame. Wait, before we jump into a 4-hour time frame, we have to add something that will give us a confirmation of our trend, right? Which is a trend line. Well, most people have this concept of saying trend lines that do not work, does not work, this and this and that. Well, it does not work for them, but for us, it does work, because we know where the market will be going. We know the sure direction of the market, where the market will be moving, where the market will be going, and how the market will be moving, and how volatile the market might be. As for in case we would have known that the market will be this volatile with this long bearish candlestick, right? Okay, so with a trend line, I would like to do it like this. Clone it a bit and then add it here. The trend lines should not be that huge to a point whereby you are getting confused and you do not know the exact move of the market. Just as simple like this, clone it and then put it, and then you are good to go. Okay, so we can see here that we had a bullish move to the upside, right? And then we had a bit of a correction at this point here, which is a head and shoulder. Okay, so currently we do know the direction of the market, that since we are having a bullish market, we are expecting the market to reverse and shoot to the downside, right? Because if we have a bullish move, obviously the market will have to come to the downside, break that level, create a bit of a retest before continuing to the downside. Okay, and then take a bit of a retest before continuing to the downside and finishing up our 90% rule. Okay, so let me go to a 4-hour time frame, because we have now known our zones. We have highlighted our zones, our key zones. Okay, so moving to a 4-hour time frame, let me just remove nothing. Actually, let me not remove anything for now. Let me just focus on what we are having here. I'll remove most of the things on the 1-hour time frame, because on the 1-hour time frame there will be a lot confusing. So to make it simple and convenient for you guys, I'll be doing that on a 1-hour time frame, so you guys can see clearly what we are doing here. Okay, so guys, since we now know the market direction, right, because that we had a beautiful new move to the upside, we now know that the market has to come to the downside no matter what the case might be. The market has to come to the downside no matter the case might be. So remember guys that we placed our zones on a daily time frame, right, on our weeks. Just look at this. Just look at this here. Here we managed to place our zone, right? Let me just highlight it for you using this. Our zone, right? And then look how the market moved. Look at the beautiful sell the market took to the downside. Look at the beautiful move the market had to the downside. If it was in that case, we are going to put our stop loss level Let me just use this one just here. Our stop loss level was just going to be just there. And then look at how beautiful this trade would have been. Look at how beautiful this trade is, you see. So this strategy actually works, but however, I have not revealed the whole thing to you. I'm just showing you how the market would have worked out. Same applies to here. We can see that this zone here, was a beautiful zone, whereby our stop loss would have been at this point here. Our stop loss level would have been at this point here, and then we have a shoot to the upside, right? And a shoot to the upside. Well, our take profit target was going to be this take profit target, because we would want to reach this level, but however, the market reversed at this point here, leading to us actually having those good peeps, right? Regardless, as long as money is made in the market. Okay, so let's go back to what I was talking about. Okay, so we can see that this level is a respected level, whereby the market reversed at this point here, right, at our zone. But most people will be asking a question, Major, let's say we placed our stop loss at this level here, and then we entered our trade here, but our trade was going to be invalidated by this week here. Well, with this week, I can explain to you that this week can be found in a daily time frame, right? This week can be found in a daily time frame, whereby we would put our stop loss just above this week and use proper risk management. Let's go to a daily time frame. You see, this week, what can be actually it can be in a position whereby it can be catered for. As you can see, that this week is a representation of how the market was in a daily time frame, or how the candlestick was in a daily time frame, right? So meaning that our entry point was going to be at this point here, You see how simple this is. This is not that hard, to a point whereby people start losing money. Let's go to our stop loss would have been in this point here, and our take profit would have been in our 90% rule, which is this rule which we have here, right? Okay, so going back, let me just do this. Going back to the market, we're actually going to be having a high confirmation, because we would see that we have a chart pattern which is called a head and shoulder chart pattern, which ranges in this form like this, and then a shoot to the upside, which leads to us having a head and then a right shoulder before continuing to the downside. Okay, so let me remove some of the things here, so it doesn't be that much confusing to you guys. I'm trying by all means to make this very, very, very much simple for you guys, so you can understand. Okay, let me remove this one here, second and third. Now let me just leave this one for now. Okay, so currently we do have these ones that we have currently, right? Which is this ones which we are looking at. So this trade was going to be a beautiful trade from that point there to the downside, which is what the market is actually doing currently, right? The market is doing that currently. Okay, so looking at this, we can see that the market is in a bit of a consolidation. We might call this level as a consolidation. Let me just highlight it with a clear Let me use a clear one. Spectrum. I know it's fine. I want something clear so you guys can see. All right, let's use this one. Okay, we can see that this level was a bit of a consolidation level whereby the market was playing inside this price here until a breakout was made, until a breakout was done, right? So we can see that we were in a bit of a consolidation whereby the market was inside this consolidation, which we have just highlighted here. So therefore, with our horizontal lines are there to actually help us in terms of giving us that confirmation that there's a possibility that the market might move in this direction, that there's a possibility that our trades can be this profitable, and that there's a possibility that our trades can be of profits, right? So this consolidation which we are seeing here is a consolidation created by this chart pattern, which we call a head and shoulder, whereby we have a left shoulder, a head, and a right shoulder, a retest of that level, and a continuation to the downside. Okay, so let me remove this. Which one? I want to remove this highlights which we have here of a consolidation, but I feel like it's fine because we still need to have it so we can know that this was our consolidation level, right? So where the market was consolidating a lot, reason being that it was trying to create a proper move for a head and shoulder. Okay, so we can see that with our zones here at this point here, we'd have anticipated for a buy at this point here. I don't feel that it was more of a good entry point for us, because remember guys that we sell high and we buy low. So this level here was a form of a retest. It was a form of a retest at that level there. It was a form of a retest, right? It was a form of retest because we can also see that that level here is also part of this level which we have here. So we can see that this was a form of retest so that the market can get enough momentum to push to the upside and finish our 90% rule, which was this level here. This is our 90% rule of the higher highs, and the lows which we have here is our 90% rule for the lower lows, which we are expecting at this point here, which we are expecting at that point there. So going back to a 4-hour time frame, we can see that we had a form of a retest or a reversal at that point. For some people, they would say that this is an order block, right? It's an order block. This level here is an order block, OP, in terms of SMC, right? For people who are trading SMC, who are using SMC, this is what we call an order block, whereby the market will shoot to the upside, where most people would have waited for this order block so they can take the market to the upside. But however, if I see a beautiful trade like this at this point here, I wouldn't hesitate to wait for an order block before taking that trade. I would take that trade immediately, because I would see that this is a profitable trade and a high probable trade for us to take, right? So I'll take that trade, hit that take profit target, and then come to this downside here, wait for that retest, then continue with it to the upside. Then we made good profits, unlike waiting for a retest and then taking that trades. That's a huge waste of time, guys. Time is money, and that's a huge waste of it. So for some people, I might say this as an order block, right? Where the market will get that much momentum to shoot to the upside. And then we can see here that the market came for a retest and then it shot to the upside. So we can see that our horizontal lines are significant levels whereby the market mostly rejects or rather reverses at that point, right? Because we can see with this here, we can see that the market decided to make a reversal. So with this here, our entry level would have been here, right? At this point here. And then our stop loss level would have been just below this here, just below this zone. Just below this zone, right? I'm just making an example with what I am seeing. We haven't moved to the current market price yet. We haven't moved to the current market price, so I could show you how the market is actually moving. The reason being why I'm making these examples of previous market price, or rather the market price which we have just passed from, because this is in October 24th time frame, right? The reason being why I'm showing you this from a different time frame or from a previous time frame is to show you that this is how you should actually be trading using this strategy, and this is how you should be analyzing, and this is how you should see how you can put your stop loss, how you can minimize your profits, minimize your losses, and maximize your profits. So we can see that that's where our stop loss would have been, and therefore our trade would have been from this zone here until that 50% rule, right? Because that's not a 100% rule or a 90% rule, that's a 50% rule. I'll explain to you just now why it's a 50% rule. The reason being why it's a 50%, no, it's not a 50%, it's a 75% rule, because quarter of all this move is just here, right? Is just here. That's quarter of this move, and the full elevation of that move is just the take profit at this level here. It was going to be a 100% rule if it was just at this point here, or a 90% rule if it was just from this point here going to the upside. But however, since it's just here, it's a 75% forex rule in the market. So we can see that our trade was going to be a beautiful trade with a minimization of losses, and because yes, our trade was going to be here. Let me make this clearly at this candlesticks here, right? And then our stop loss was just going to be below this week, because the market has a possibility to hunt stop losses. So to avoid all the stop loss hunts, we make sure that we put our stop loss level just below the week, in case the market comes to test this week here and shoot to the upside. There's a possibility that the market can do that. So to avoid that, we place our stop loss just below that week, because the market can reverse at that week and continue to the upside. But however, in this case, the market did not do that. Okay, so let's move on. Moving on, we can see that the market hit our 90% rule, but however, in this case, it was just a 75% rule, right? Okay, so going back, we can see that in the current market structure, or in the current market price, we can see that the market is having this consolidation, right? Whereby in other cases this is called a flag. This is called a flag, whereby we have the left arm, which is raised here. We have the flag, or rather the body, and then we have the right arm, which is decreased, or rather which is in a slow form, right? In a down form or in a deep form. Okay, so we have this as a flag, right? So in this case, a flag represents to us that we are having a push to the downside, because in this case, or in this market of gold, we have high confirmations, guys. We have high confirmations of this market structure. Currently, do not mind this zones here, because I'm trying to actually explain each and everything that I'm doing here. So I want you guys to take notes, download this video, understand this video, watch it back to back, back test it, and do everything so you can get full information and understand what we are doing here. So I would suggest that you watch this video now and now again, back test it, download it, do all those things, take notes so you can understand this here, because this is a simplest form of our strategy. We have made this strategy to be much more simple for your understanding and for you guys to actually grab this strategy which we have. So we have made it that much simple and that much understandable. Hence, so I'm trying by all means to actually explain each and every form and each and every step of the way, and how to actually manage to enter those trades, take those trades, place your stop loss levels, place your take profit levels, and all those things, you see. So currently we are in the current time frame, right, or in the current market price. So we can see that the market hit our 90% rule of the higher highs, right? We can see that the market hit our 90% rule of the higher highs, and therefore it has came to the downside and tested this level and shot to the upside. As I've explained, that our entry point would have been in this level here, and our stop loss level would have been in this level here above the week, as I've explained with this analysis here, or rather with this move here. So our trade was going to be in this manner, or in this form, right? From that level we take those entries to the downside. This was going to be our proper entry, right? Okay, so removing this, let me just remove it. Removing this, we can see that our levels actually play a major role in actually helping us see how the market is moving, right? How the market is trending, how the market is moving, how the market is profitable, or how the market direction in general, right? So we can see that it came to this point here after completing the 90% rule. It came to this level here, we tested at this level and shot back to the upside. So we would have known that at this level here we are looking for buys, right? We are going to be able to take those buys properly without any hesitation and swing to the upside. This is a swing trade, guys. This is not a scalp trade. This is a swing trade. There's small moves here. Most people will say it's a scalp, it's a scalp, it's a scalp. It's not a scalp, because looking at this time frame, we can see that this started on the 31st. This candlestick was on the 31st of October around 4 p.m. and then this move was completed on the 1st of November around 12 p.m. So this is not a swing, this is a scalp. Mostly a swing is a trade which is above 12 hours, right? That's a swing trade. A swing trade is a trade that is above 12 hours. A scalp trade is a trade that is below 12 hours. Below 12 hours. That's a scalp. A swing is above 12 hours. Take note of that. That a swing trade is a swing trade above 12 hours. And a scalp trade is a trade that is below 12 hours. Anything below 12 hours, that's a scalp. From your 5 minutes, 15 minutes, and 1 hour, those are your scalps. And your swings are from 4 hours going above, and those are your swing trades. So since you know that our scalps are above 12 hours and our swings are below 12 hours. No, our swings are above 12 hours and our scalps are below 12 hours. You could see that we are going to be taking this beautiful swing to the upside and another swing to the downside, because we would have known that as soon as the market reaches this point and fails to break this point, that's our take profit, right? If the market breaks this point and goes above, that's our continuation of the trade. Therefore, we would be trailing our stop loss just above our profits, right? So we can see that at this level here, the market reversed, or rather rejected, acting as a retest of this level here, which is, in some cases, most people can say that this level here is an order block for SMC, right? So we could see that at this level here, the market reversed and took those sales, right? Leading to this also being a retest, right? At this level, also being a retest to the upside and a continuation to the downside, testing these levels which we have placed, right? Remember that we are now into the FX major strategy. We are now into the FX major strategy, and we are now diving deep into the strategy itself. Currently, we are still on a 4-hour time frame. We are still going to go to a 1-hour time frame and 30-minute time frame, 15-minute time frame, and 5-minute time frame, so you guys can understand fully, because looking at this you won't be able to take those proper entries. Yes, this might be or seem as good entry points or entry levels, but however, in a 15-minute time frame, in a 1-hour time frame, that's a different story, because you might blow your accounts there. So this here acts as a confirmation, not a trade setup. It acts as a confirmation. So therefore, we still need to jump to 1 hour, 30 minutes, 15 minutes, and 5-minute time frame. Okay, so we can see that we had a bit of a retest, a breakout of this level here, and a retest of that level, and a swing to the downside, a test of this level, a proper entry from this level to the upside, and a swing to the downside, which the market is now trying to take in those sales and go to our 90% rule of the forex market for swings and for scalps, right? Because it's one and the same thing. Okay, looking at this here, we could see that yes, we had a beautiful move here. Therefore, our trade from this level here was going to be a beautiful trade, because we would have also entered other trades at this level here and giving us a continuation to the downside. So this is how simple it is. This is how you can properly spot those entry points. This is how you can properly spot all those snipers, all those setups you see using the FX major strategy. So we can see that this is what we had right before a continuation to the downside. Let's jump into a 1-hour time frame. With a 1-hour time frame, we can see that we have, okay, so let me go back a bit. Okay, so everything seems to have confirmed everything, right? Everything seems to have confirmed everything. Okay, so this is how probable our strategy is. Okay, so at this point here, most people were going to be saying, major, this is a double bottom, this is a double bottom at this point here. Therefore, the market will shoot to the upside, not with our horizontal lines, Okay, so we could see that here we had a beautiful double top type formation at this point, right? Leading to the market to have a beautiful move to the downside. Most people who have closed their trades here at this point here, that's for scalps, right? For scalps, they would have closed their entry points at this point there. But however, the market was going to be playing at this level here, because we would know that that's where the market has to play at, reason being of different factors into the market. I will show you why the market was going to be playing at that level. Okay, so looking at this, we can see that the market had a beautiful move at this point here, and then a shoot to the downside, right? Leading to us having a high confirmation that the market is actually breaking and searching for that 90% rule of the lower lows there at the bottom, right? Okay. So we can see at this point here, so we can see that the market is actually in a good move right now, right? It's actually in a good move, respecting each and every setup which we have placed here as our horizontal levels, right? As our horizontal levels. I'll also be sharing this video on our Telegram channel and also TikTok. This is the FX major strategy which you guys have to use whenever you trade. This is the FX major strategy which you guys have to use whenever you trade. Okay, so we can see that the market had a move to the downside, right? After having a proper entry point at that level there, it moved to the downside and created a form of a retest, which led to us having a huge momentum in the market, and then it shot to the downside. Right? Okay, so most people would have asked me this question, that major, the market is mostly in a consolidation level or in a direction whereby it's moving like this, right? Creating moves, retesting, coming back, and all those things. So what makes you to be that sure that it will come to the 90% rule which you highlighted, which is this one here? Well, look at the daily time frame, right? That we have to look at the daily time frame first. On a daily time frame, we can see that we already have a huge candlestick to the downside, right? Therefore, a second candlestick to the downside will be created this at this point here, which will end up at this level here, right? And the third one will be created, probably a playing candlestick type formation, and then but eventually the market will reach this level here. You can check out the market in the next few months, few weeks, few months. You would see that the market is actually coming to this level here, is actually coming to this level here to test this level. But the exact move of the market, which I'm actually expecting the market to be moving in that way, is, let's go to a 1 hour time frame. In a 1 hour time frame, we can see that the market already is reversing at our level, right? Therefore, if it's reversing at our level, we know that the market has to come to this consolidation which we had here. But however, the market did not reverse, or rather reject, at this level here, right? It rejected and reversed at this level here. Therefore, the market will come to this level here. Okay, so let's do this. From this point here, the market will have to come to this zone here, which is this level here, and then shoot to the downside. Then take a shoot to the downside. And then take a shoot to the downside. This is what I'm expecting for the market. But however, the market won't be moving in this type of way. Remember that we have our lines, right? Our horizontal lines. Therefore, the market will be moving in this type of formation, whereby at this point here, it will come probably here, test this level, and go to the upside before shooting to the downside, right? This is the exact move of the market. This is what I'm anticipating from the market, because we just had USA elections, and therefore the market is expected to move in a beautiful move, right? In a beautiful way, because the US dollar is currently in a good position, in a good state. Therefore, the market will be moving in a good position, or rather in a good state. As you can see, currently we are having that confirmation of a move, right, to the upside. This candlestick here is a confirmation to us that we are expecting moves to the upside. So with this here, I'm expecting the market to come to the downside after shooting to the upside here, test this level here, and then proceed to the upside, because already that level has been tested, right, by the market coming to this point here, testing it and reversing at that level to come test this level, so it can shoot to the upside. So at this level here, the market will break this level, and then it will shoot to the upside. And at this level here, that's where we can expect ourselves. In traders terms, this is a retest. This level here will act as a retest of the market. The market will retest at that level, also confirming to us that that will be our neckline. That's something I haven't explained to you guys. Our neckline was supposed to be at this point here, as I've explained. Okay, let me actually explain this whole concept of head and shoulder. Okay, so with head and shoulder, we are expecting to have a left shoulder, a right shoulder, and a head, right? And as soon as the market breaks everything here, the market will break with it with a short and create a retest on the neckline before shooting to the downside. So currently we do have the neckline, which also results to us having confirmation of a market trend breakout retest, which we have here, whereby the market will test at this trend line, or rather this market breakout, and also it will test at this neckline. Remember that I said that our reversal is at this point here and not on the neckline itself. However, the neckline, we have, how many necklines do we have? I think we have 1, 2, 3. But however, this is our major neckline because the market reversed at this point, right? Created to us to being a major key. So the market won't reverse at this point here, but however, it will reverse at this point here and then continue to the downside. Okay, so this is in a 1 hour time frame, right? Let's go to a 30-minute time frame. So with a 30-minute time frame, we can see that this is actually not a bad move which we might be expecting from the market, because we can see that the market is actually respecting most of our setups, and we can see that the market is actually moving in a good formation. So but for scalps, as soon as the market touches this level here and acts as a reversal or a reject at this level here, that's where we know that we are going to take the market to the upside. Therefore, currently in the market, I'm actually expecting a move of this formation, right? A move of this form. Probably it will fit here, but however, we have a small space. Let's just consider it to be here, right? Consider it to be here, and our stop loss level will just be at this point, just below our week, right? Or our spike. Let me just put it in red. It will just be below our week or our spike. So this is what I'm expecting for buys, right? Let me just put it here. This is what I'm expecting for the buys, for the buy moves. This is what I'm expecting for the market. Then from that point there, which is this level here, that's where we can expect our selling opportunities. Well, do not mind this trend line breakout, because the market can break this level and test this level, which might act as a false retest breakout, right, before continuing to the downside. So do not mind this unless the market will move in this here, in this zones, until it finds that space for it to actually move to this zone here and create 100% profitable and probable trade to the downside. But however, currently this is what I'm expecting, and this is what I'm actually seeing that the market will be doing, right? This is what I'm expecting that the market will be doing from this level here, continuation to the upside, and then from this level here we are expecting a sell opportunity until a selling opportunity until our golden zone, right? Until our golden zone, which is our 90% rule in forex, our 90% rule in forex. So this is what we are actually expecting. Let me go back to 30 minutes. Okay, so this is what we are seeing. Let's go to a 15 minutes time frame. 15 minutes time frame. This acts as a confirmation also, but however the market is trying to reverse at this point here. But however, this is our golden zone too. This is our level which we have to consider highly of. Therefore, the market might play in this zone until it reaches that level here. 5 minutes. Also in 5 minutes we have that same move, right? 5 minutes we also have that same move whereby we are actually expecting the market to move in a beautiful move and reach our level there, which is our retest level. So this is a scalp trade, guys. This is a scalp trade whereby we are expecting the market from this point here to reach this point here in few hours, before 12 hours. Currently the time is 4:30 to 5, so probably by tomorrow around 2 a.m, until 6 a.m, this is this would have touched our level there. This would have touched our take profit level there, which is just there. So this is what I'm actually expecting, and this is my analysis, and this is my top down analysis, and this is the FX major strategy. So be sure, guys, to also subscribe to our YouTube channel, join us on TikTok, join us on Facebook, join us on Telegram, and share this video to family, friends, and loved ones so they can also take part of this free educational content which we have just given away, which is the FX major strategy. Well, this is not the full FX major strategy because of time and because of how long the video is. We have decided to cut this strategy short for you guys, so you can grasp what we are giving you currently. And on another video which we'll be uploading using a PC, or rather a laptop, we will be sharing this whole move to you guys using a laptop, right? So we'll be sharing with you the strategy which we personally use mainly on each and every trading setup that we get, or that we have. So this is FX major Mentor, and this is not the full video of the FX major strategy. Part 2 is coming. Just be informed, just stay alert. Join us on Telegram so you can stay alert and informed. Subscribe to our YouTube channel so you do not miss out whenever we upload. Hit the notification bell so that you do not miss out once we upload that video. Otherwise, much love from me, FX major Mentor, and I'm signing out.